Hello, welcome to the Metrics for Managers training. This is Arun, and this is everything you need to know about how the numbers work at Driven Auto Care. No, not much more to say, so let's just get right into it here. Why do metrics matter for Driven Auto Care? This business runs on numbers. I was an accountant in a past life, so I kind of have structured this whole business around numbers. And considering you're here at a job, I bet you're here to try to make money. And money is also a number. And you're here for a certain amount of hours every day, and that's also a number. And our customers are here to pay us, so that's also a number. There's a lot of numbers here. And it is very important, therefore, that we focus on numbers and you get up to speed on exactly how the numbers work at Driven Auto Care. The first couple of numbers that I want to run by you are the big headlines of this business. We want to reach a $1 billion valuation as a company. Mathematically, what that means, and this might go over your head, might not if you are familiar with business valuation and accounting and finance, we want to grow to a $1 billion valuation. The way we will do that is by having 320 locations, generating $1.5 million in revenue each per year at a 15% net income ratio. And that margin will mean that our price to earnings number needs to be 14x the earnings that we would have in order to reach a $1 billion valuation. 14x price to earnings is pretty reasonable, at least here in 2025. We'll see where it is, 8 years from now when we expect to be at that $1 billion number. But nevertheless, that is what we have as a long-term goal for this company. Next, we want to make sure that each shop makes enough profit every year to buy another shop. We have bought our 3 shops that we have as of today for an average purchase price of about 130 grand. Pretty low. We then have to add in another 50-ish thousand in renovations, marketing costs, hiring costs, et cetera, et cetera. And so you're looking at around 200 grand a year that each shop needs, and that's before paying taxes. So then we add tax on top of that, and you're actually looking at $250,000 to $400,000 in net profit that each shop needs to make every year. And lastly, this is not a number that actually is going to land on a specific number, but we want to make sure that you are paid well. We want to pay above market for all of the positions we have in this company. But we will only be able to do that if you take responsibility for generating a high level of performance in this business. We want to make sure that you're paid well. The way that you get paid well is by achieving these strong metrics. So, with all that said, here's the metrics and what you can do with them. We want to make sure that a store manager is fully aware of how these numbers work so that they can do 3 things. We want to make sure that you can diagnose issues to make sure your shop runs better and as good as it possibly can be. We want to give you credit for a job well done. We don't want to screw up the numbers and make it impossible to see how we're doing. And we want to make sure you and your team is paid accurately. That only happens if you are managing your numbers very tightly and to a high degree and a high standard. So, what numbers are we paying attention to? We have the daily dashboard. The daily dashboard is generated every night by Mia. She lives in the Philippines. She works nights by Pacific Standard Time here in California standards. And she will deliver accurate metrics, if you give her accurate metrics, to your email inbox every single morning. It's pretty great. You can expect in your inbox every morning a daily dashboard email that covers all the metrics that you need to pay attention to on a day-to-day basis in this company as a shop manager. So, what are those metrics? There are time metrics. These are productivity, efficiency, and proficiency. There are pricing metrics. This is effective labor rate, hours per repair order, and sales per billed hour, all of which is acronyms, as you can see here. And we have production metrics. This is hours per day, total sales, and car count. We have payment metrics, which is basically for cash flow management purposes. We need to know how much money we are taking in every day. And then we have a target sales per day number. All of these are very, very important. Some of them more so for managers, some of them more so for higher level positions. The one that we don't talk about later, that I'll just briefly touch on now, is target sales per day. With 2 technicians, you should be able to do, with 2025 pricing, at least $100,000 in sales per month. So that's what the target sales per day number is calculating, is if you're to hit 100 grand this month, here's what you need to do for the rest of this month per day in order to hit that number. And that number will move every day based on how you've done up until this point. So, and the last thing actually, before we move on, the daily dashboard has every shop on it. You can see what each of your shop managers is doing. That is cool because not only can you see how you're stacking up against your peers, but you can kind of compete with them. This isn't a place where we're here to sabotage each other. If you do that, you're not going to work here for very long. But you do want to have some friendly competition and see who can really deliver the best when it comes to Driven Auto Care performance. Let's get into the metrics. First, we're going to talk about time. Time metrics are used to answer different questions about how you are managing your technician's time. Productivity. How much of your technician's days are spent actually working on a car? Efficiency, the next one. Are we billing the appropriate number of hours for how fast your technicians are working? And the last one is proficiency, and this is the one that really moves the needle. How much of our technicians' working hours are we actually billing? That one is what truly drives higher levels of sales and profitability in Driven Auto Care. All of these are percentages. There are 4 numbers that are used as inputs to calculate these percentages. First, we have service hours. This is calculated in Shopware using the service clocks. So when a technician logs into their app on their iPad, they can clock in to a specific service on a specific repair order. It will then show up as a white box in Shopware on your workflow screen so you know that they are clocked in on that specific service. If you see a technician with no white box in their workflow, you know they are currently not clocked in on a job, and that should start sounding alarm bells for you because that's what they are here to do. Apart from things like, well, I'll get into that later, but that is what they're here to do. Service hours are the number of hours that were clocked on jobs that were actually closed that day. This is different from work hours, which uses the same input of actual time clocked in Shopware. Work hours are the hours that a technician was clocked in on any job that day. So if we're looking at a single day, service hours could have service clock time from a previous day on it. But work hours is only for the hours that a technician was clocked in on jobs that day. Service hours, the number only shows up for service hours if we close out repair orders. If we don't close out repair orders, there are no service hours for a given day. Next, we have billed hours. Billed hours is how many hours we billed the customer for that repair order that closed on that day. So again, if you don't close anything, you will have no billed hours. If you close a job, the hours billed on that job will show up in the billed hours line. And lastly, we have available hours. Available hours is the actual time that a technician is clocked in on Workforce. Workforce is our payroll system. This is what we use to pay our technicians their hourly wage. This number is separate from Shopware completely. We use it out of Workforce because we pay off this number. This number is what you have a lot of control over also because you control when they clock in and out for lunch, for the beginning of the day, and for the end of the day. And it's your job to approve timesheets at the end of the week as a manager. So you have full control over how available hours shake out too. Sometimes you will need a technician to work overtime. Just by the way, I'm not saying don't work overtime. I'm just saying you control available hours. Now, how are the 3 key metrics calculated? Productivity is calculated as work hours divided by available hours. You can see here. So that means the number of hours clocked in on shopware in a given day divided by the number of hours clocked in on workforce in a given day. That number is productivity. Efficiency is calculated as service hours, meaning the hours clocked in on shopware for closed jobs that closed that day, divided by the number of hours we billed the customer for closed jobs that closed that day. That is efficiency. And lastly, we have proficiency, which is calculated as billed hours divided by available hours. So this is the hours we billed that day divided by the actual time the technicians were at work and getting paid at work for that day. I'm saying that day, but this also applies to a week or a month or whatever time period you're looking at. So we will come back to kind of how to use these metrics, but then I want to first get through all these definitions of how they're calculated. Next is pricing. This is how you look at these numbers to figure out how to move the needle to increase sales and gross profit. First, we have effective labor rate, or ELR. The question that you're asking yourself with this one is, am I making enough dollars per billed hour for labor to ensure strong sales and gross profit? Next, we have hours per repair order. This will basically be a gauge for how much are you selling on each repair order. Are you generating enough recommendations, and are you generating enough sales on each repair order? And the last pricing metric is sales per billed hour. Are you adding in all of the stuff outside of labor and maintaining a high effective labor rate that adds value to our customers and generates a high enough number of sales per billed hour that we have? We try to manage the business based on time so that your technicians and you are speaking the same language with regard to hours. We want to make sure that billed hours and clock hours and service hours and work hours are all universally understood by you and the technicians. But when it comes to pricing, this is only on you as the manager. This is where you have to make sure you're keeping these numbers as high as possible through highest sell-through rate for hours per RO. You are pricing your labor accordingly, and you're not just giving away a lot of free labor items, and that you are adding in all the additional sublet items, hazmat fees, and parts that we need on jobs to maintain a high gross profit and sales number per billed hour. So we've got the metrics and how you calculate them here. Effective labor rate is calculated as total labor sales divided by billed hours. Total labor sales in terms of dollars divided by billed hours. Hours per RO is calculated as total billed hours divided by car count. Sales per billed hour is calculated as total sales, not just labor sales. Now we're talking about total sales divided by billed hours. So as you can see from that, just as a aside here, effective labor rate is a component of sales per billed hour. So those numbers are kind of going to move together, but both need to be tracked separately because effective labor rate pricing and how you monitor your effective labor rate is a different skill set from how you add additional sales per billed hour. One is identifying opportunities. The other one is managing your pricing accordingly. Okay, so I talked about the fact that we were going to go from here's what the metrics are and how they're calculated into how to use them. So next we're going to talk about the targets, the standards for Driven Auto Care, the range of acceptable performance here, and what you need to focus on in order to succeed and achieve that range of acceptable performance for each of these metrics. So we're going to start with time. Productivity, we want to see at 85 to 90%. This means that technicians should be actively working on cars, actively wrenching, researching, talking to you about repair procedures, whatever it may be, for 8.5 to 9 hours per day in a 10-hour workday. The remaining hour and a half, it's reasonable. You know, the technician's not going to appear at work, instantly start working, and then work the entire day without any break, and then end the day with no and clock out instantly. That's not how it works. You do have to take into account paid breaks, cleanup, organizing tools, moving cars in and out of the shop at the beginning and end of the day, and other closing and opening activities for the business. So there's definitely going to be other stuff that technicians need to do, but we want to make sure they're wrenching as much as possible and that you as the manager are empowering them and enabling them to do that. Next, we want 100 to 150% efficiency. This means that our technicians should be finishing repairs in the same or less time than we are billing. I'm going to say that again. Technicians should be finishing repairs in the same or less time than we are billing. We bill 0.5 for a confidence inspection. A confidence inspection should take no more than half an hour to complete. We charge 0.5 for a standard vehicle oil change. That should be how long a standard vehicle oil change takes. It's up to you to ensure that we are adding on adequate amounts of time such that we can ultimately achieve 100 to 150% efficiency. The reason there's a cap on this, 150%, is that we don't want to gouge the customer. If we charge them 10 hours to do something that takes us 2, we are overcharging them and we should give them some of that time back. You can use your judgment on how much time exactly to give back, but keep in mind that if you charge a fair price for our services and we are rewarded for being extra efficient and we are rewarded for having the right equipment that we invested in order to be that efficient, for example, it's okay to be greater than 100% efficient. However, if it gets too egregious, then it's not really a fair price anymore. Again, I'm hiring people to run this business that have that strong ethical compass, and so I expect you to use it. Lastly, we have proficiency. You're aiming for 75 to 100%. 75% proficiency is actually lower than the acceptable performance ranges for efficiency and productivity. If you have a minimum of 100% efficiency and hit the minimum of 85% productive, you'd bill 8.5 hours per technician per 10-hour day. I'm asking you to hit 7.5. If you can bill at least 7.5 hours per technician per day, we will hit those profit numbers that we need to hit. That is what matters here. If you can hit productivity and efficiency, proficiency will follow. That's what there is to it. You don't need to focus on proficiency in and of itself, especially considering that number does take metrics that are both, or inputs, not metrics. Proficiency takes inputs that are both time constrained and non-time constrained. So what do I mean by that? A time constrained metric here is available hours, the denominator of the math problem. Available hours is what it is for that period of time. Billed hours, which is the numerator of the math problem, is any time that is closed out that was billed within that time that you accumulated available hours. So you may have billed hours that you mostly did the work on 2 weeks ago, but then you were waiting for one last part, the part finally comes in, you throw it in, it takes half an hour, you close out the job, and you bill 20 hours for something that took half an hour of that technician's available time in that week. Your proficiency is going to be through the roof for that week. That's great. But that means that in the week 2 weeks ago that you did 19 hours of work, you actually had horrible proficiency because you didn't close out those 19 hours. So there is a balance here. That's why it's better to focus on productivity and efficiency to get to this ending ultimate number over a longer time period of proficiency. We try to look at proficiency on a monthly basis while we look at the other two on a daily and weekly basis. Okay, let's talk about pricing next. Effective labor rate, you're aiming for $250 to $275 an hour. Our posted labor rate as of today in December of 2025 is $300 an hour. $300 an hour is obviously more than $250 to $275. Here's why. We offer free half-an-hour confidence inspections on every car that comes through the shop. That's $0 at half an hour on every single car that comes through the shop. If that's all we do, our effective labor rate on that job is 0. If they come in for an oil change and a confidence inspection, and that's all they do, we will have charged 1 hour of labor and made $110 typically with our current maintenance rate of $220 an hour. We will have made $110 for 1 hour of build time. That means our effective labor rate is $110 for a confidence inspection and an oil change. So you have to work and sell additional services to ensure that your effective labor rate continues to climb with everything else that people are bringing cars in for. Also remember, level 1 testing, another free 0.5 on there. So you do have to ensure that the next metric here, hours per RO, is high. You have to make sure that the pricing on the rest of the hours that you're charging is high so that you can get this effective labor rate all the way up to 250 and 275. Now, on to hours per RO. We don't want every customer in the world. We don't want every car in the world coming through our shop. We want to deliver an excellent customer experience to customers who appreciate it. What that means is we can't have 15 cars a day for 2 technicians in your shop. Why? Because 7 cars per tech is more than half a day spent on our excellent customer experience of a confidence inspection. If we're trying to deliver this experience and only doing inspections all day long, and all you're doing is estimating and trying to sell and estimating and trying to sell, and your technicians are just inspecting and diagnosing cars, you're never going to actually get any work done. That's why you need to focus on a higher sell-through rate on a fewer number of cars, such that your average hours per repair order is 3 to 3.5. That's what we're aiming to do. We want to decrease the number of cars. This isn't a big box chain where every single customer is our customer. This is where we want people who are willing to spend money for a better customer experience because they recognize that that experience is worth the extra money. That's what we do here. If you deliver on that, they will be so happy to pay you. They will be so happy to pay you. That's the type of customers that we want here. If we do that, and if your technicians are identifying and recommending services and repairs on vehicles, then you can increase your hours per repair order and decrease your car count, and you will make much more money, have much less stress, and much happier customers. I think that sounds pretty good. Lastly, sales per build hour. You want $400 to $450 per build hour. This means that you are identifying all of the other stuff that isn't labor, in addition to maintaining a high effective labor rate. You want to identify your sublets, your fees, and your parts that you're going to need on every single repair order. In doing that, you can move the needle very, very quickly to grow your sales and grow your gross profit if you're identifying all of these things. Make sure you have your fluids, make sure you have your hazmat disposal fees, make sure you have your tire fees, make sure you have your chemicals and hardware, make sure you have your cleaning supplies, make sure you have all that stuff in your estimates so that our sales per build hour number is 400 to 450. Honestly, getting this number requires a lot of sublet as well. Sublet is one of those things that when the opportunity presents itself, you should have a local relationship with somebody who can help us deliver the right service to our customer. If you're able to do that, you are also a hero to that other vendor and to your customer. If you're giving somebody else work and you're solving a problem for the customer without them having to deal with it, we win. That's the point. Okay. We're going to come into the end here. We're wrapping up. It's the last slide. You, as the manager of Driven Auto Care, understanding the metrics that I just went through here is what will make you succeed in this job. So now that you've gone through this training and you understand how each of these metrics is calculated, you can see that you have control over every single one of them. The only thing that I've heard that is a reasonable excuse for a manager that I will accept for a total of like 1 week, maybe, is the phone just stopped ringing one day, I have no customers in the shop, and my technicians are standing around doing nothing. That should be the case if all your loaner cars are fully maintained, all your personal cars don't have anything that you want to get work done on, you have nothing else going on, you have no past customers that are willing to bring their car in, you have no special projects that you are putting off with those great customers, there's no fleet you can offer a little deal to if they bring in all their trucks right now. There is so much that you can do to generate car count, and you must do to generate car count as the manager of your location. It is not just up to online marketing to make the phone ring. You also have so many levers to pull to increase your productivity. If you're slow and the phone just dies and it takes a couple days for it to pick back up, that is the only excuse you have to not hitting your targets. Everything is within your control. And critically, the two things that you have the most control over is how your technicians are spending their time. You can micromanage them nicely, like crazy. This is what I do when I'm running a shop, is I am over their shoulder all the time, not nitpicking the repairs, because we hire good technicians that have a high quality standard, a high diagnostic capability. If you have good technicians who are efficient, have good diagnostic capability, who have a high quality standard, you have nothing to worry about as far as looking over their shoulder for the actual repair itself. The only thing you're looking over their shoulder for is to see where they're at, so you know what to think of next. You are thinking on their behalf. What's the next car to work on? When do I need the parts to arrive by? When are the parts going to arrive by? What lift needs to be free? Are the keys already at their toolbox? Are the parts already at the lift? What can you do to help your technicians be as efficient with their time as possible and save them time on all the other BS tasks? You should be leaf blowing the shop. You should be mopping. You should be helping get lift arms out from under cars when they're ready for a test drive. All of these things save just those couple of seconds, because in this company, as one of our first core values, every second counts. Let's see. Next on here, we have the metrics that you've learned in this course will help you and your regional manager diagnose issues with the operations in your shop and improve your shop's performance. This is huge. You can read one of these things, and one of these daily dashboards, you can read one of these and see exactly what's going wrong with the shop and fix it very quickly. So to that end, make sure you review your metrics every day and look for ways to constantly improve. The second core value we have is always raising standards, and I hope this training helped you do that today. So all that said, go out there and hope you crush it today, tomorrow, and next week at your shop, and stay driven.